On to this story now. The financial performance of Patrice Motsepe's African Rainbow Minerals has displayed some resilience for the miner despite logistic challenges throughout the full financial year to the end of June. For more on the mining group and its performance, we are joined by the CEO, Phillip Tobias. Phillip, thank you very much for your time this afternoon. You were recently appointed to this hot seat of a CEO, actually replacing Mr. Schmidt, who had been there for over a decade. How have the first couple of months and these maiden results for you in the hot seat been as you have taken up that role?
Xolani, thank you very much and good afternoon to you and the viewers. I mean, indeed, it's a great pleasure to join this interview session this afternoon. I mean, what is very good is that I came in from Harmony, if you remember, November 2021. So I've been with Mike, for over 16 months before the appointment. So that enabled basically the smooth transition, where I got to settle down and to learn the business. So how has the past 3 months been? Obviously came at a time when we've seen some headwinds on the PGM side, the platinum group metals, coming from the high where we're basically enjoying the basket price as high as about 1.2, million rand a kilogram. And we did a sharp decline in about 2-3 weeks time. And we're sitting at anything between 700 and, 650. So almost like over 40%, a decline on that price. Obviously with that, it means if you're not on the right cost quartile position, if you don't have good margins, I mean, the survival becomes a way to go, So that is a challenge that we've experienced on that. And also the challenge that the business has experienced on the platinum group metals has been more on the low volumes of ounces as a result of the great challenges that we've had at Two Rivers Platinum Mine and also Modikwa. So Two Rivers Platinum Mine, we're mining what you call through the split reef. The split reef is a very challenging type of ore body that we're mining, geotechnical challenges. But fortunately, over the past 3 months, we seem to have got it right, and we are in control of that, and we are quite comfortable that we're now getting it right. However, on the other side, it's basically a call back to, mining discipline, making sure that we improve our quality mining so that we can get our average mining grade basically back to the reserve grade. So those are some bit of the challenges on the platinum side, and also the cost issue. I mean, if you see our unit cost, you realize that our platinum year on year increased at 21% and 24%, which is far exceedingly above inflation rate. So that calls for immediate attention to the issue of the cost, to get cost reduction, cost optimization, and cost containment measures, to make sure that the business can really do well going forward. Or if you look, moving on to the other side, onto the bulk iron ore. Iron ore, I mean, we've really regressed, year on year from over 16 million tons to over 13.8 due to the challenges that we had on the logistics and the port, the rail and the port. So the both mines, I mean, Kumani and Beeshoek, they're well set, to really deliver, as I said, I mean, on an installed capacity of 16 million tons, well resourced in terms of the workforce, highly motivated workforce, quite experienced workforce, high grade, quality ore body, that is well sought after. But the only basically constraint at this point in time has been the rail and the port, so we need to really debottleneck it. And how are we doing it? Management and executive leadership continue to engage with the Transnet executives. There's going meetings almost weekly. I mean, the chief executive basically who's running Ferrous, running ASMA, I mean, had basically 2 meetings today, with Transnet in the morning and in the afternoon. That really shows you how much, time we're really spending. And through collaboration and engagement, we are able to sort of identify, one can say, low-hanging fruits. There's processes that are currently underway. There's some internal discussions. Hopefully, they will bear fruit. We just need to make sure that we land on the same path and be able to come up with a sustainable, collaborative, solutions that will benefit all stakeholders and also benefit SA Inc. as well. So to make sure that the sustainability, we grow these companies and we're able to continue to contribute positively towards job security and job growth, so that we continue to be active in terms of the economic participation in this country. Manganese as well. We've just concluded a big project at Black Rock where we spent 7.4 billion rand. So this project was completed in September 2022. And basically it was a modernization, project, creating an enabling environment for our employees, making things easier so that we can reduce things like the cycle time. The trucks, the haul trucks that are being used underground can really have a shorter distance, from the working place to the dipping areas. 7.4 billion rand has been injected in that, and we've just in June now closed also a Gloria project as well that was basically had to do with the loading infrastructure and all that. So the mines, we've invested and injected quite a lot of capital, and what is really required now with the quality assets that we have, the high grade ore bodies that are sought after, is to basically get these things, to the port, through the port to our customers, so that we can continue to have that competitive advantage. Because remember, it's an open market, so we need to make sure that we are quite.
Let me come in there. You, despite all these challenges, you've managed to pay a dividend collectively of 6.6 billion rand to shareholders. But what is also interesting is that you are also on the lookout to buy new companies for possible acquisitions, including in the lithium and copper space. But you are apparently concerned about the big money being paid currently for assets that have to do with the green energy or the just energy transition. It seems like the company was saying today that the money that some of these companies are going for just because they're in that space is way too much. Are you still interested in getting into the green energy space, particularly expanding on it, because you are there with your other arm of the company, but in particular when it comes to lithium and copper?
Look, copper is one of the commodities that we covered. ARM historically has been, active in copper. There was an operation that we ran in Zambia, and there was an interest that we had as well, in DRC. So copper has always been. There was actually the fourth portfolio, which was a copper division. So, and we know that is a metal of the future. But everybody is looking for it, and that's the reason why you find that the prices are prohibitively expensive. So in our growth desire, in our growth, trajectory, obviously is not growth at all cost. So we'll have to look for value accretive opportunities that are in line with our investment criteria and strategies. Remember, all that we want to do is to deliver competitive returns, and create sustainable value for all stakeholders. So competitive returns, you have to make sure that whatever you get, you still have some margins, to make you profitable. It's not acquisition at all costs. So we'll have to make sure that it's value accretive to the business and it grows the business, not at all costs. Yeah.
Phillip Tobias is the CEO at African Rainbow Minerals. Thank you very much, sir, for your time.